Hello and welcome to another Bitesize Brexit podcast brought to you by MHA Larking Gowan. My name's Chris Scargill and I'm a business advisor with the firm, and we've been putting together a series of podcasts on matters relating to Brexit. And of course, one of the key issues that we're already aware of is the agricultural bill that turned into the Agricultural Act at the end of 2020. So best person I know to speak about agricultural matters is my muddy boots guy, and that's Laurie Hill, and he's with me here today. Hello Laurie, how are you?
Morning Chris, very well thank you. Nice to be back again.
And it's a lovely sunny day.
Exactly, wonderful.
Welcome back. And also welcome back to Tom Parish, who is the head of the rural team for Savills, the property consultants and agents. How are you, Tom?
Chris, really nice to be back. I'm very well, thanks.
Jolly good. So we're going to ask some very sort of deep questions today. We've touched on factors affecting agricultural values. So let's actually get into some of those real pieces of detail today. Before we start, Tom, just a bit of background about you.
As you said, I look after the rural team for Savills in Norfolk. That's a collection of people doing all sorts of rural work between management, consultancy, lots of valuation and tax and structure. So that's when we see and we work a lot with the likes of you guys, as well as I suppose the bit we're talking about predominantly at the moment, the muddy farming and the transactional piece as far as the land market is concerned, where we try and keep as busy as possible.
Because there's a lot of changes taking place, but I think that from my understanding, land prices have been pretty fixed for the last sort of 18 to 24 months, not a lot of movement, but the Agricultural Act may start to change things. What do you think, Tom?
I think you're right, Chris. It's very perceptive. I mean, we've got what we have is actually quite robust, quite static values in terms of, if you look at the overall market. We're still at historically low supply. So what we have is an even lower supply in 2020. Obviously, we've had a relatively exceptional year than we saw certainly in the east of England and in particular Norfolk on a five-year rolling average for that. We have a good deal of trade in the land market, as you guys I'm sure will see, is off market, and probably those private deals have represented an even bigger proportion of the market this year than probably they have done previously, probably between 30 and 40%. The long-term average would be between 20 and 30%.
Okay. And have you seen, with Brexit coming, this is the whole podcast that we're focusing on here, any movement of overseas nationals moving out of the east or into the east? Any movement there, or has it been unaffected in the last 4 years since the vote?
Short answer is, Chris, we haven't seen a great deal of change. We talked just now about it being a really quite tight market where supply has been down, so there haven't been big opportunities for people to make big movements in. There obviously have been some quite significant transactions, especially in the east in the last 2 or 3 years. It's ultimately the most commercially facing of the farmland markets in the UK, because it's where we have the lion's share of the most productive land. The Stratton Parker Farms deal 2 years ago now was the biggest single corporate transaction, as much as a land transaction, but the biggest single deal. And if you strip that out of the supply, especially for Essex and Suffolk in our region, then it underlines the point as how tight the turnover has been, and that's really one of what's helped sort of maintain very robust values. Arguably, we've had some different aspects at work this year. Obviously, with the year we've had, including the agricultural bill and everything that means as far as the changes to agriculture, but that's really intensified demand for particular sorts of assets, which has underlined the long-term trend in the market, which actually is varied in terms of prices paid. So whilst there's an average, I suppose, of about £8,600, £8,700 per acre for arable land, an average in such a small market is a really dangerous thing, because it masks a variance between the good and the bad in terms of values of arguably £6,000 or £7,000 per acre between the top and the bottom over the course of the year.
And how are you finding things, Laurie? Are you seeing that people are thinking that this is a stable market, or a market to invest in, or a market to just hold off for the moment?
I think it depends on risk appetite as to whether you're looking to expand at the moment. Those farmers who are probably a little more averse, I wouldn't have thought they're going to be ploughing a lot of money into new land. It depends on the level of cash availability, it depends on the level of debt that they're willing to take on, the debt serviceability as well. Whereas those farmers who want to take a bit of a punt and like having increased acres, there are people out there who do like to say that they own X number of acres. Might be looking to expand and taking up the opportunity because, for example, you can get, so you'll sit on a bit of land as a family farm, and that particular area won't necessarily see any other bits of land next door come up for sale for 25, 30 years. So it's almost the opportunity cost as well as weighing up the actual cost. And I know that having said in the previous point that we discussed in the first episode of this was that you'd often find the farmers willing to pay a little bit more, a bit of a premium for land next door. So I think it all comes down to the appetite of the farmers and landowners, their desire to expand.
And do you think that some farmers will be expecting the movements to take place similar to what, you go back 20 years, we've had some significant movements in land prices to the prices of today. Do you think the next generation are expecting to see such big changes? What's your thoughts, Laurie?
I think on that, well, from the year 2000 to now, obviously there was the height of the land prices in 2014, which was sort of way over 10,000 an acre on average. Is that right, Tom?
Yeah, absolutely. Yeah, I mean, that's sort of mid 2014 would certainly almost been the top of the market.
I think when it comes round to land prices and going forward, it is a safe investment. However, I can't necessarily see that it's going to increase significantly over the next 20 years. You could almost go for the argument of inflation, and if you took out some debt now on a 30-year interest only, you'd hope that the capital growth would outweigh any potential losses. But I think it will remain relatively stable because at the end of the day, there's only so much land in the UK, and we're not creating any more. And with ELMs coming in and the need for increased environmental benefit coming into play with the Agricultural Act, that less land might actually be farmed. More land will then be put into these schemes, but more and more information will come out over the next few years.
Yeah, I think that from what you were saying last time and other conversations that I've had, people will be having to make that commercial decision, won't they, between growing a crop and investing potentially longer term into the greening structures and benefiting from the ELMs. I mean, do you think that any other nuances coming from the government are going to change prices in the short term, Tom?
Nuances coming from the government. Well, I think there will be elements which are particularly exposed, particularly parts of what will happen we sit here on a Tuesday when there should have been a Brexit deal on a Sunday and then the Thursday before. We come back and think about the East, then, there are some food producers in particular here, both in terms of growing a commodity and processing, that will be particularly exposed to what happens in terms of the trade and labour aspects. I mean, they'll be really important for those sort of businesses. How the detail comes out on some of the stuff which is still not really there in terms of granular detail in the agricultural bill, and what farmers will have to do over the course of the next, in terms of the ELM scheme that Laurie mentioned just now, and how much money is available and for doing what, and how that can relate to their particular business as opposed to as opposed to how they may have to collaborate with other businesses to gain access to those higher levels of support, which historically, they've been very used to. Let's be honest.
And Laurie, have you? I mean, again, one of the options you see in the fields is you see lamb and you see pigs being brought on. Those some of them aren't on necessarily the best land. Do you think that with the risk of tariffs, we might see those areas going into greening? Have you had any rumours?
Not to that extent, to be honest. I think those who are looking possibly for a new revenue source might consider on marginal land. I know you mentioned pigs. I've got a few clients that who've recently, in the last 5-6 years, started up a pig enterprise, and it pays quite well. I just think in terms of a net profit perspective after tax, it probably actually pays better than an ELM scheme for the area of land that it would be on. Because with ELMs, we still don't know what the level of payments are going to be. Yes, there's three tiers, and Tom said that the higher the sort of the collaboration item, getting more land available to try and hit the higher tiers to get a greater support benefit might be less attractive to some than to others. So I think, coming back to your question about pigs and sheep, I don't think it will necessarily deter people from it. Yes, there might be impacts of the taxes on the border, but I don't think it will necessarily deter them from possibly what they love, because usually sheep and pig farmers love it.
Yeah. Okay. And so,
In broad terms, Chris, we're still a net importer as far as food is concerned.
Yeah.
So that we should, one of the things that farmers really need to concentrate on is how they access, or their sort of almost their customer relationship almost with their internal market, and how they might think about those supply chains in a different way, which the entrepreneurial ones, and we can all think of some in Norfolk, have already been really good at doing.
Yeah. So again, just to returning back to the land prices, there's a great emphasis at the moment on greening. We've seen ELMs is focusing on greening and carbon reduction. Do you think that marginal land prices, rather than just the best agricultural land, might start to equalise a little bit? What do you think, Tom? Do you think marginal land prices might start to increase if there's an opportunity for a better revenue stream?
Yeah, I think so. That's one of the interesting things that the agricultural bill and the environmental bill has kicked off, and it remains a relatively it's fluid, and it's quite a new market, to be honest. There's not loads and loads of evidence out there in terms of this land is traded for X pounds per acre on the basis of doing this, because what's really uncertain is how measurable the outcomes are going to be. What's the ton of carbon sequestration going to be worth? What's reducing the ammonia content in the River Wensum, for example, going to be worth per milligram per litre, or however you can demonstrate it. So those metrics in terms of how all this is quantified is the real the real thing that's going to evolve. And from an accountant's point of view, it's going to be fascinating. You're almost going to be thinking of the environment on the balance sheet along with the cattle or the arable enterprise. I think in terms of how it's affected the market, we used the phrase earlier, which was variance, and that is going to remain that, because there will be the greening bit, the carbon sequestration, the offsetting guilty conscience, anything else is a new dynamic in the market, and it can be quite location specific. So we've seen one of the early ones was a water company who was particularly keen on controlling land within their catchment to reduce slug pellet use, for example. And so there's a particular use which is linked to a development where the value was captured. But we've seen longer term in the forestry market where there is a a consumer of carbon and a producer of oxygen. Lots of quite developed, funds and individuals looking into that market where values have risen steeply.
Have you had any clients, Laurie, considering selling off forestry land to large corporates who are trying to equalise their carbon position?
Not at present. There may be some within our client base that would be considering that. I know that there are various clients that Tom and I previously mentioned about, and we're discussing solar parks and points around there. We've had clients who have been approached to create solar parks on probably more marginal land, but whether there's the ability within the grid, as Tom was saying, to actually export the electricity, it depends on what area you're working within. But I think for the time being, it's a growing market. It's kind of almost a market within a market, and it's only going to grow. I think, in my opinion, it's only going to grow because of where I think it's possibly going with the environmental side.
And Tom, if we've got businesses, farm businesses with some cash, do you think that the point we've discussed before about buying up the land, the neighbouring land, that's not always available? Do you think with the greening opportunity, which may be less, need less resource to manage, could be bought further afield, so we may see a bit of a spread of farms?
Yes, potentially, Chris. I mean, I think you're absolutely right. It's going to depend on the business and what's always been important for guys like you and I talking to our clients, and is no less so now, is understanding the fundamentals of the business, what they're really good at, and focusing on that. So, if you're in an area where there's good land, then it comes back to that sort of generational opportunity to be able to expand, and almost certainly expand profitably if you're a good business with good land. The disparate question is a good one, and it's one in which certainly some of the larger scale businesses are looking into. Can they acquire blocks which balance their business a bit more? In particular, say their land holdings a bit more. In particular, say they have some more marginal land or very productive land, for example. I mean, there's areas of fen skirts, say, which are historically, until they were farmed, were just extraordinary stores of carbon, because that's what peat does. So those areas where there's probably only a certain number of harvests left in the soil, there's likely to be to increasing value in reverting those to what they were originally, dare I say, as opposed to what they may be cultivated.
Yeah. So lots of things happening. Anything you're seeing, Laurie?
I think from my perspective and the client base that I have, is that it tends to be the next generation who are really looking into this in a lot more detail. Those who are coming in and probably a bit more wary of what's going on within the environment, and aren't kind of almost, not to be sort of one size fits all or rude, is that farmers like to do what they like to do, and change isn't necessarily always welcomed. And the next generation coming through, who are more aware and can understand the environmental side of things, are probably more keen to push that, and to try and push for other ways to make money within the business, because at the end of the day, changes to the business, albeit whether they're environmentally driven or profit driven, if it is environmentally driven, it's going to be to make a profit at the end of the day, because people don't get out of bed in the morning to make a loss. You get out of bed in the morning to make a profit. So I think it's my thought is it's the next generation who are really going to push the change, and are probably thinking possibly further afield, and they could, like you say, they could consider buying land elsewhere, because the management side of it is a lot less intensive.
And I just think that the next few years, as the BPS changes, I mean, the ELMs comes in, we're going to see a lot of head scratching taking place, a lot of possible look at change. I mean, anything you'd like to say in summing up, Tom? What do you sort of think that the businesses are going to be thinking about for the next 4 to 5 years?
Well, I think the really interesting thing is that they've got, we're in a moment now, and your Brexit podcasts are a reflection of that, where there's more aspects of play, probably certainly than there has been in my working lifetime. But the agricultural land market has tended to be counter-cyclical to the wider economy because it's had the stability of the common agricultural policy underneath it. That isn't the case now, and so we have an emerging policy framework within the UK set against probably some economical challenges within the wider economy, given the year we've been through. So we're quite positive we're very positive as far as values are concerned, but we come back to this point as far as divergence. The top prices, I think, are underpinned as far as the quality assets, those of which are in good areas with good infrastructure and probably have a bit of scale. Where the market will be more varied is in some of those examples where we talked about, where there's either specifically high demand because it's the opportunity, it's that opportunity value of good land in a good area, or there's not. It is more marginal land in an area where there's not that many farming focused buyers, so therefore it could be always likely to be more varied, but overall we're quite bullish as far as the market's concerned.
Exciting time ahead. Laurie, any summing up points?
I think to sum up, Chris, values of land remain strong and have been so for a while now. However, I do think that we may see a niche land market arise, with marginal land becoming popular for those looking to fulfil an ELMs quota, or for the big carbon heavy companies looking to reduce their guilty consciences. On the other hand, how many farmers being keen to take up ELMs, we don't know. If the numbers are anything like the countryside stewardship schemes, I don't think DEFRA would obtain the numbers they forecast and desire for the success of the overall schemes. But I can't finish without mentioning tax. When we've been discussing land values and buying and selling, farmers, landowners and even lifestyle buyers come to that, must always consider the capital taxes, succession and structures around these types of transactions.
Perfect. So, well, bring it back to tax and planning. Just a perfect advert, Laurie. Well done on that. Top marks, go top to the class. I think on the basis of time, I think it's appropriate that I say thank you to the listener for listening to us today. There's plenty to be thinking about, plenty to be planning for, and I'd just like to thank you for listening. You've been listening to an MHA Larking Gowan Brexit Bitesize Insight podcast, and you've been listening to me, Chris Scargill, him, Laurie Hill, and big thanks to Tom Parish as well from Savills. And I'd like to remind everyone listening that what we've covered today is available on our Brexit hub on www.larking-gowan.co.uk. So, brilliant. Thank you, guys. See you soon.